A while back, I gave you one number. I told you to watch it. 175.50. Not a prediction, not a vibe, an actual price level built into the fine print of a company's own lockup agreement. I told you which path we'd be on depending on whether the stock got anywhere near it. Well, now we have a confirmed date for the moment that number actually gets tested. And as of right now, it's not even close. Not close at all. Let's go through exactly what happened and what's actually new since I first told you about this. Fun fact, SpaceX stock is currently trading below its own IPO price. It priced at 135 back in June. Right now, it's sitting at 123. That's something like 45% of its post-IPO high of 225. A company that was the biggest IPO in history 6 weeks ago is currently worth less per share than the day it opened. Quick recap if you haven't seen the earlier videos on this. This stock's lockup isn't a normal one clean 180-day wall. It's staggered. And one of the biggest triggers in the whole thing has a specific price attached to it. Insiders get to sell 20% of their restricted shares starting the second trading day after the first earnings report. That's just baked in. Happens regardless of price, but there's a bonus, an extra 10% on top of that. It only unlocks if the stock closes at least 30% above that 135 IPO price. So 175.50 or higher on 5 out of the 10 trading days right before that earnings report. That earnings date is now locked in, August 4th. The base 20% unlocks over 900 million in change shares, hits the market August 6th. And the bonus triage, the one tied to 175.50 at current levels, it's dead. Well, maybe not dead. The financial press is now saying this outright. The same conclusion I walked you through the math on weeks before it was a headline anywhere else. Now, I don't want to take a victory lap here because the honest version of the story is that some of what's driving the stock is stuff I didn't have in front of me when I first laid out this thesis. This isn't just the float mechanics playing out exactly on schedule. Real new information has shown up. Morgan Stanley put out a note flagging something like 672 billion funding gap for this company with no projected positive cash flow until 2035. Let that sit for a second. 2035. The AI facing side of this business, the Starlink satellite AI integration piece reportedly lost 6.4 billion in 2025. And another 2.5 billion just in the first quarter of this year. And on top of that, financial stuff, the 13th Starship flight got scrubbed on engine issues in the middle of all this. None of that is the lockup calendar. That's just the business itself looking rougher than it did 6 weeks ago. Here's where I want to be careful, because it'd be easy to get excited to say the short thesis is fully here. It's not. At least not in my own framework. I told you the real flood, the window where the risk actually flips in favor of the shorts, it's Q3 earnings through December 8th, when the bulk of the non-Musk shares go completely free. This August event is still in the setup phase. The staggered slices keep coming after this too, another 7% roughly every few weeks through October. That's still ahead of us, not behind us. What I will say is this. The fundamentals coming out right now make that back half of the year look uglier than I originally had modeled. I built this thesis around supply and demand, mechanical insiders getting more shares to sell over time. I didn't build it around a $672 billion funding hole. If both things are true at the same time, more supply hitting the market, and a real question about whether the underlying business can fund itself, that's not a case for panic today, but it's a case for taking the back half of this calendar more seriously than a pure mechanics story that would suggest on its own. Now, if you're actually thinking about playing this, there's two ways to do it, and they're not equally risky. One way, the riskier way, is to short it now before any of these unlocks actually land, betting that the sellers actually know what's coming and keep leaning on the stock's anticipation. That can work, but you're guessing ahead of the actual supply. And if the market shrugs off the news, you're exposed with nothing to point to yet. The safer way is to just wait. Let the actual unlocks hit. Let the shares actually land in the market. And watch what the stock does with real supply in front of it, not anticipated supply. Now here's the catch with the safer path. If the stock's already taken a real dive by the time the unlocks lands, you have to make a judgment call because a lot of the move might already be priced in and you're late. But if the stock hasn't made that move yet when the shares actually hit, that's a much safer short because now you're reacting to something that already happened instead of guessing that it will. And hey, I'd be lying if I made it sound like this was a consensus call. It isn't. As of right now, something like 27 analysts still rate this as a buy. One says sell. And the average price target is sitting around 240. That's basically double where the stock is sitting today. Wall Street broadly still likes this name. I don't know why, but they do. I'm not going to pretend the bear case I just walked you through is the only story to be told about this stock right now. It just isn't. So here's where this leaves us. The number I told you to watch, 175.50, is firm dead for this cycle. Exactly the way the math said it would be. And now it's actually news instead of just something that worked out on this channel. But don't let that bonus triage take all the attention. The base unlock is a real signal too. No conditions attached. Over 900 million in change shares free to trade starting August 6th, with the next slice landing August 20th, and Q3 earnings still ahead after that. Here's my honest take, and I admit this is as much gut as it is math. Everybody watching this stock already knows this calendar. When that many people are staring at the same date, a lot of them don't wait around for it to actually arrive. They front run it. They sell ahead of it so they're not the last ones holding it when the shares actually show up. My instinct is pressure builds into the August 6th date and builds again into Q3 in December 8th. Whether or not the stock looks calm between now and then, I'm not going to flatly tell you to short this. And I'm not going to tell you to sit on your hands either. Go back to what I said about the two paths about a minute ago. Short it now on the bet that everybody already knows it's coming. Or wait and react to those actual shares landing. Where I actually personally lean, given how public this calendar already is the front running has already started. But I've been wrong before. And this is exactly the kind of setup where being early can cost you as much as being wrong. One last caveat, because it's honestly the biggest risk to everything I just said. None of this accounts for Elon. He can say 2 or 3 sentences on a stage in an interview someplace in a random live stream and kill this whole trade in an afternoon. I don't know how he does it, but hey, I can hand you dates. I can't hand you a filter for what he might say next. And lastly, go do some of your own research. Figure out where you stand on this before you do any type of investing. Don't trust me, just a random guy on YouTube. And as always, good luck, take care, and bye-bye.